welcome back to my channel. It's CJ here, and today I'll be doing another short video on just talking what I purchased in the stock market and why you should invest in the stock market. So now I want to talk about some reasons why you should invest in the stock market. It's because you're going to receive share appreciation. You're going to get better return on your investments opposed to just leaving it in a savings account or checkings account where you're getting 0.06. I think on average, the average savings account yields that. So you're basically receiving no money on your money with a savings account. Yeah, I think it's 6 cents for every $100 that you put in there, but that's not no money, honestly. So when you put it in a checkings or a savings account, you're getting, I think the S&P 500 and the stock market on average yields somewhere around the lines of like 10-11% before inflation. But a lot of stocks, a lot of companies in the stock market are inflation proof. You just got to do your research, your due diligence, and you could easily beat inflation because the stock market on average beats inflation. And if you don't feel comfortable putting your money in a stock, you can choose an ETF, an exchange traded fund. It's basically a collection of stocks or a basket of stocks where there's less risk and there's less volatility. And it's pretty safe in my opinion. Like I love it. Like I'm gonna get my pops, I'm gonna get him to invest in like a ETF because he's still fairly new to investing in the stock market. So that's a good place to park your money. Like WeBull consists of, I think, Apple, Amazon, Microsoft, Google. It's a lot of great companies in there. And when they do well, you do well if you're invested into the ETF. So that's a safe way, and index funds as well, or a safe fund like the S&P 500 index fund, which a lot of companies, if they put their money into the index funds, they're safe as well. Yeah, you're earning a lot of interest, whether it be in the stock market or the crypto market. Like the crypto market, you're receiving a lot of appreciation as well, because historically the stock market as well as the crypto market are known to go up. If you look 10 years, 20 years, 30 years since the inception of them, they've been going up. I mean, you might have your slight dips and blips, but it always comes back. It always tends to come back. Like you have the 2009 recession, 2009, 2010. It took a little while for it to recover, but it came back. You have the stock market crash of 2020, which was the fastest stock market crash in history, which I was thankful for to be a part of because I made a lot of money with that. A lot of money for me. During that time period, you could have parked your money in just about anything. Like you could have shot fish in the barrel, just about any company, as long as it was a alright company, and you would have made money during that period of time. And the stock market has been on the up since then. Like it came out of March, you went into later the year, the stock market has been way up, and even now we're still way up. I think the Dow Jones industrial average is like 35 or 36,000. I remember when that had went, it was under 20,000. So yeah, it was a lot of money to be made. Like the gains have been ridiculous, like crazy. Like the amount of money that you make in the stock market will be determined by the amount of research you do and the amount of time that you put in to just checking out. I personally like to invest in companies that I use on a daily basis. Like Microsoft, I love that company. It's not going anywhere. I use their products like PowerPoint, Excel, Word. Like their products aren't going anywhere. Like you can park your money in Google. We use that on a daily basis. Or Facebook. Like if you use Facebook platform, Facebook owns Instagram as well. And the WhatsApp. If you use any of those platforms, you'll better understand. You'll better understand what it is that you're invested in. But always do your research. Like you can listen to earnings call, look at transcripts, as well as look at their balance sheets that they put out and their income statements. Like you could download the app Yahoo Finance, and that'll help you a lot. Like it's a really great app, and it'll tell you about each company as long as you know the ticker symbol. For instance, Microsoft ticker symbol is MSFT. Like you just type that in, and it'll tell you whatever you need to know about the company. And that's a great way to research. That's what a lot of people use to research. But the stock market is a tool. It is a tool for creating wealth. Like I like to say all the time that I'm a long-term investor. Like because you're gonna do better in the long term than you will in the short term. So you might as well just hold it. Plus, you don't have to worry about taxes like that if you just hold for the long term. Like as far as capital gains tax, which are the gains that you receive from a stock or ETF, you would have to pay that if you're in the green as far as with your gains. If you have gained a certain amount, you have to pay the capital gains tax. But if you hold that investment for a year, your gains, you'll be taxed at a lower rate than you will if you have sold within a year. So dividends are the amount that a company pays you out of their profits to their shareholders or investors. So if you're holding a stock and it pays a dividend, you would have to hold significantly less time. I think it's like 3 months, 2 or 3 months or so, before you get to take advantage of the lower tax rate for that you're taxed on the dividends when you sell them. Yeah, the stock market is a great tool for building wealth. Like you're gonna be nervous at first. That's with anything you're trying new. But once you get in the habit of doing it, you don't even have to start big. You can start small. Like a lot of companies, they don't charge nothing, no brokerage fees. But back in the day, they used to charge you money. But we're in a golden time period right now where they don't charge you nothing to invest, and you can start as little as $1. That's all it takes. That's all it takes. And you don't have to invest your life savings into it. Don't invest your bill money or anything into the stock market. Just don't invest more than you're willing to risk. Do your due diligence. And I pretty much mentioned a lot of this a little while ago about why you should invest in the stock market. But I'll go down the list again. So you get higher returns in savings and checkings account. The average returns in the stock market for the last 10 years, 13.9%, basically 14%. Last 30 years, almost 11%. Last 50 years, about 11%. And like I said, it's historically been known to increase. Something that I didn't mention was you get an opportunity to own a portion of the companies that you know and love. Like, I know it was exciting for me when I first got to invest in companies like Apple, Microsoft, and I have used their products all those years. And I first, for a while, I looked at it as a way that I could kind of get my money back, like of Apple stock, through their dividends, through their stock appreciation, the gains in their stock price. I could kind of get my money back, well, some of my money back for all the products that I spent money on over the years, like the Apple iPhones, the iPod Touches, the things like that. So that's a little way I look at it. And I look at it as being you're part owner of that company or that corporation. You're investing into their stock. You get a portion of that company, ownership. So, like I said before, the savings account APY is 0.06%, basically nothing. And you compare that to the S&P 500 index average return is 10 to 11% per year. I think I said that. The NASDAQ average return is almost 11%. The Dow Jones, the Dow Jones average return is about 7% per year. You know, I mentioned here's the definition of the dividend. So it's the amount of the company's profits paid to shareholders just for simply owning the stock. Like when you have a dividend, it usually means that a company is stable, and it's usually a larger corporation. They usually pay dividends when they're at a point in their life where they're not growing as much and they have an ample amount of cash, and they just want to give back to their shareholders and their investors through dividends. And they believe they can maintain that, which is why they choose to pay it out. So they reward the shareholders. So some things to just take into consideration. There are risks. You can absolutely lose money, but you only will lose what you're willing to risk. So do your research. Another kind of downside, I would say, is the downside. With a lot of these brokerages, you don't get to withdraw your money as fast as you will with a checking or savings account. It's not as at your disposal, but it's still is pretty quick. Like you still could put a lot out of there pretty quick within a few days or sooner, a couple days. With Fidelity, my brokerage that I use, they have a credit card as well as a debit card, and I got a debit card for both my dividend only account and my growth only account. And I have the debit card set up with them where I could kind of instantly pull out funds. I have yet to use it, so I couldn't give you much insight on that, but it's still pretty quick, but not as I wouldn't think it's as quick as just having a checkings or savings account. But I could be wrong. But some other things to take into consideration are, risk. As I stated before, the stock market and the crypto market are more risky than checkings or savings accounts, which I really don't think they're that risky, to be honest with you. Like index funds and ETFs are extremely safe, in my opinion. Like you can just park your money there and not worry about it, and you'll be able to sleep at night just fine, as long as you know what you're investing into and you do your research. You can sleep fine at night. Like none of my investments are keeping me up at night. Like I can sleep just fine. But I guess it just comes with in the process, in due time, in the process of actually doing it. The more you do it, the more comfortable and the more safe you'll feel doing it. Of course, that's with anything. Once you, when you're first riding the bike, you're not comfortable. You don't feel confident that you can do it. But you have to take that step and venture out. And then after you actually do it, I mean, you're gonna fall. You're gonna fall. You're gonna bust up your knee a little bit. But once you get in the process of actually doing it, you get better and better at it until you could ride with no handlebars, or not with no handlebars, but without your hands. Like you feel confident enough, and that's kind of the same thing with investing. You get to the point where you feel confident enough to just venture out and just invest in some of these high growth stocks. If you get to that point, if that's your style, like people have different styles. Some people are more of dividend investors, some people are ETF investors, some people are just crypto investors. So you got to find your style, and you find your style over time of investing. But like I said before, the stock market is a great tool for building wealth, and you can use it to your advantage, but you got to know how to use it. Because there's a lot of folks out there that aren't invested into the stock market. They go for the crypto market. They go for the meme crypto or meme stocks in the stock market, just the popular ones. And if you don't know what you're doing, that's a quick way to lose money. That's gambling. You don't want to gamble. You want to know what you're investing in and how it would do in the long run based on research, based on the numbers of the company. And you just want to be well educated. So I also want to show you some of these articles. So this is from the Motley Fool website, why it is important to invest in stocks. So the stock market has created an enormous amount of wealth over the years. On average, the S&P 500, which consists of 500 of the largest U.S. publicly traded companies, has returned 8 to 12% per year. At that rate, only $10,000 invested in the stock market 50 years ago would have grown into more than $380,000 today. Wow. However, be aware the stock market doesn't always go up every year. The S&P 500 typically falls 3 out of every 10 years. Some of those drops can feel quite brutal, and that level of volatility is not for everyone. That's a fact. But if you can manage your fear, stocks have the potential of earning significantly higher returns than other investment options over the long term. What are the benefits of investing in stocks? There are many benefits to investing in stocks. 7 big ones are the potential to earn higher returns than alternatives like CDs, gold, and government bonds. The ability to protect your wealth from inflation as the returns often significantly outpace the pace of inflation, the ability to earn regular passive income from dividends, the ability to own a tiny slice of a company whose products or services you love, the ease of buying and selling, which makes stocks a more liquid investment compared to other options like real estate, the ability to diversify a portfolio across many different industries, the ability to start small thanks to zero commissions, and the ability to buy fractional shares with many online brokers. Investors can begin purchasing stocks with a little bit of money. Is there any reason not to invest in stocks? Stocks are not without their drawbacks, the biggest of which is volatility. On average, the stock market declines 10% from its high roughly every 11 months, 20% about every 4 years, and more than 30% at least once a decade. Investing in stocks isn't for everyone. Consider these valid reasons not to buy stocks. You can't stomach the thought of more than a 10% decline in your investment. You need the money within the next 3 to 5 years for a down payment on a house or other large planned purchase. You're retired or nearing retirement and need a fixed income stream more than the capital appreciation potential offered by stocks. Beyond volatility related concerns, there are other reasons to avoid stocks. You have a high you have a lot of high interest rate debt like credit card debt. Paying off this debt can often yield higher returns than buying stocks. You don't have an adequate emergency fund. Having enough cash on hand to cover An emergency expense can prevent you from needing to borrow money on a credit card. You don't have the time or desire to research stocks to buy. Why you should start investing ASAP? When there are some valid reasons not to buy stocks, the upside potential outweighs the risk for most people. Therefore, it's almost always a good idea to invest in stocks, even when the market is at an all-time high. It's not too far off right now. But the studies have shown that what's more important than timing the market is an investor's time in the market. Holding out for the right time to buy stocks can be costly because a large portion of gains come from a small number of days. Meanwhile, stocks tend to recover from corrections decline of more than 10% in a matter of months. Thus, the longer an investor is in the market, the lower probability of losing money. Equally important to time in the market is picking the right stocks to buy. Time in the market is better than time in the market. I just wanted to add that. But as Monthly Fool co-founder David Gardner puts it, it doesn't matter when you invest if you're investing in great companies. A minority of stocks account for the majority of the market's overall return. That's why it's better to buy stock in a great company as soon as you can than wait around for a better price that may never come. For most people, the time to buy stocks is right now. Those who have money they won't need for a few years should consider investing in stocks to produce the highest returns. Yeah, you should always have your money working for you. You should never have it just a large amount of money just sitting in a savings account that you don't need at the moment. But waiting to invest that money is more likely to have a negative impact on the investor's returns than a positive one, which is why the best time to buy shares of a great company is almost always right now. But yeah, I just wanted to read that article. Here's some other reasons invest in stocks to grow your money. It shows you charts over the years. To invest in stocks because historically they have gone up. Invest in stocks for the power of compounding. Invest in stocks because money sitting in cash will lose its value. Depreciation, inflation, everything's rising and your value of the dollar is decreasing, which is why it's good to have your money in assets that appreciate over time, not just sitting there in a savings account. Invest in stocks because you'll make more than other investments. Invest in stocks because they're easy to invest in. Invest in stocks for tax-free profits. Tax-free until you sell. Today so far I purchased Lockheed Martin and I purchased WeBull, of course, and the Vanguard ETF and my Roth IRA. I know I say this a lot, but I just want to reiterate to y'all that I do that on a consistent basis, and consistency rewards you over time with anything. So I just want to encourage y'all just to be consistent with whatever you do, whether it be investing or relationships or working, just anything. But yeah, I purchased Lockheed Martin. Like, I love that stock. That's the only single dividend stock that I own. And I think it's at a great price right now. It's around $340 or a little bit below that, depending on when you check the stock market. But I believe it's at a great deal right now. It still has a good amount of upside. Like, you're going to receive a good amount of share appreciation as well as some large dividends. Like, Lockheed Martin is a cash cow that's not going anywhere anytime soon. They have these big military contracts with the government, and as far as I know, the government ain't cutting their spending on military equipment. But yeah, they're making plenty of money. Their earnings They have some of the highest earnings I have ever seen out of a company. Like I know BlackRock has some pretty high earnings, but Lockheed Martin, I think their earnings per quarter, $3 or $4 or $5. I forget the exact amount, but it was somewhere along the lines of that. It's pretty high. Like the last quarter, they didn't perform like the investors hoped they would, which, I mean, it's not a big deal to me because I'm a hold that company regardless. Like I love that company, and I think they'll do well over time. They're doing well right now, and when the stock dipped with like 11% in a single day, you best believe I loaded up on some Lockheed Martin for my long-term dividend portfolio. That's the only stock that I own in there, and I'm gonna continue to dollar cost average down at the price that it's currently at. And as well as VU, I'm gonna buy VU whenever, no matter if it's up or down, just on a weekly basis. I just want to say thank y'all for watching. I love y'all. Hope y'all have a blessed rest of your day. Appreciate y'all for taking the time out to visit my channel and watch my video. And I'll talk to y'all later. Peace. One more thing before I go. I just want to shout out some people. I want to shout out my bro Thinking Byzantine. He has a dope channel as well on investing. And as you can see here, he did a Robinhood Q3 follow-up. He talked a little bit about Robinhood stock. He talked about AMC and his thoughts on that, as well as AT&T with the Warner Media spinoff. And yeah, he has several videos. Just go check his channel out. I also want to shout out my bro Unscripted with Antonio. Like as you can see here, he went to Cancun, Mexico, and he has a lot of exciting videos when he was there, some awesome content. But he also he has some dope conversations. Like as you can see here, becoming a father. He's talking about how it changed his life. There's a lack of religion equal better outcomes. But yeah, just go check his channel out. And I just want to thank everybody that's been supporting me. Shout out to Dan the Man. Shout out to Jeremy Tennant. Shout out to Karama and everybody from Miss Chat. And shout out to everybody that's been supporting me from Anton's chat. I love y'all. Thank y'all.